By Right Path Real Estate does not necessarily represent the views or
I feel like
opinions
I'm
of the
so-
staff, management, or ownership of this station. It's time to get on the right path with Right Path Real Estate Radio with Tom Perry. Get the answer to your question that's keeping you from taking action and succeeding today.
Welcome to the show. Please come inside.
Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Tom
Mike's on.
Perry.
Hey, welcome to the show. Welcome to the show. Right Path Real Estate Radio. My name is Tom Perry. I'm the host of the Right Path Real Estate Radio show. We come live Monday through Friday from 9 a.m. to 10 a.m. on AM 1110. That's Business Radio 1110 KTEK in Houston, Texas. We broadcast live from our office. We also share the live streaming on the Book of Faces at fb.com/Right Path Real Estate. We also do the same thing on Instagram and Periscope and Twitch and other. We're not live on YouTube yet, but we post it immediately after the show. And as always, I'm joined live in the studio with my brother from another mother, Mr. Daniel G.
Good morning, everybody.
In the house.
Happy Monday.
Yeah.
I love Mondays.
Man, I tell you what, I don't know about you. Actually, I do know. I know the kind of guy you are. I know the kind of stuff that you do. But I worked the entire weekend.
I probably worked more than I should have
Yeah.
over the weekend.
Yeah.
But
Did you get in trouble with the spousal unit?
well,
or?
not in trouble, but you know, she mentioned it once or twice, and there was a couple of times it was like it was raining.
Yeah.
Right? We were at the beach house, and
Right.
it's like we could have been playing cards and doing
Sure,
some
right.
stuff. But I was taking advantage of that to get through, you know, some of the training that we're doing as well.
Yeah.
I probably could have balanced it a little better, but I was really dead set on getting finished.
Right.
Because we had a goal to be done by Monday.
Right.
And I did, you did.
Sure.
So, goal accomplished.
Right.
But, I mean, for all the rain and extra work that I didn't do anything on Sunday.
Yeah.
And we had, I mean, it was the most probably amazing beach day I've ever had.
Oh, yeah?
Like, it was just so perfect. It wasn't too hot.
Right, right.
But it wasn't too cold.
Right.
The water was
Yeah.
great.
Yeah.
It was
the water cold or is it warm? Or?
It was cold when you first get to
Yeah,
it,
sure.
but not like so cold like you're like, oh my god,
Yeah,
my
right,
god,
yeah,
right?
uh-huh.
But I mean, you can. It's got a little, you know, it's cooler,
Right, sure.
But I mean, it was perfect.
Now, I also heard there's blue water. Is that or
We did not have blue water.
not have
I
blue-
think that came and went
Yeah, okay.
a week or so ago.
yeah, brown water. Brown water's back.
Yeah, it was brown water.
Yeah.
Mama had
but when you're-
rosé in her water bottle, so there was some pink water.
But when you get to your ankles, you can almost see your feet.
No, no, not in Galveston.
Ankle deep water, you still can't see your
still
toes.
Can't, you still can't. And Ashley will, if we're somewhere where you can see through the water, she'll go in the water. But
Yeah.
if you can't see through, she's not interested.
She's
So,
not. She didn't. So she didn't go in the water.
No, but well, I mean, she would walk out to her knees.
Yeah.
But you know, the weather was perfect for laying out and
Right.
all that kind of stuff. And we had some sandwiches and a little bit of wine there.
Yeah.
And, you know, it was great.
Yeah.
It
Good
really
times.
was.
So today, you know, what we want to talk about is 401ks versus real estate as an investment.
Yes.
You know, you and I are both reading a book called 401 Chaos right now, and one of the things I want to do is reach out to the author of that book and see if we can get him on the radio show. It'd be great if we could get him in live.
Yeah.
But I mean, when I say live, like in person.
Yeah.
Versus, if not, we can perhaps join
Absolutely,
him on
get him on a phone call
Yeah,
or-
get him on a phone call, right? And maybe even join him in on the live Facebook
Yep.
and all that.
We
So
do that too.
But you know there are things that I knew intuitively, but I hadn't really captured the phraseology or put a couple of the pieces together quite like he has.
Yeah.
And you know, one of the things that he's talking about is that, you know, the 401k system was really created in the 1970s. And the idea was it was supposed to be 1/3 of a three-legged stool.
Correct.
That what you were supposed to do, it was, that was nice. Okay. What it was supposed to do is to be a part, so pension from the employer,
Yep.
plus Social Security,
Plus your 401k.
plus your 401k, that those three combined would get you
Absolutely.
to a pretty decent retirement. And yet, where we are now, and one of the things he pointed out in the section that I was reading in the last couple of days, because I've covered a lot of ground in the last couple of days, but one of the things he said is that very rarely are people in tune enough with what's going on legislatively to see what the impact of what's being passed today is going to be 30 years down the road.
Yes.
And oftentimes how things get sold to us, like the Affordable Care Act, for example. I mean, it got sold to us, you can keep the doctor if you like, you can keep your insurance plan if you like. I mean, and I don't think that they ever had that the people that were passing it ever had any delusion that was actually going to happen.
No.
Because what we know now is none of that was true.
And here's part of the problem for me in that scenario, and the reason they're able to do that is because there's, it's very much like a realtor giving you a high valuation on a property.
Yeah, of course.
There's no downside for them.
Well, there's no accountability.
There's no accountability. There's no risk. Like, if it doesn't happen the way they say it happens, there's nothing comes back to hurt them.
Yeah, you would think that voters would come back, but really what they say is, well, it was our intention that this or that would happen, and they can blame it on the market or whatever, right? But and what he's really talking about is that very few people would have seen the kind of greed that got developed over the last 30 years. And when you look at, in fact, there was a quote by a guy, the guy that actually started Vanguard. And let me see if I can pull up this quote real quick, because I probably in 2006, Bogle, who wrote a scathing letter, and his name is John Bogle. He's a legend in the mutual fund industry. He's the founder of Vanguard, one of the largest mutual fund companies in existence. So he says in 2006, so this is, 13 years ago, right? What he said is that the government body that oversees the investing arena in the United States regarding the shift from wisdom to greed that has occurred in the mutual fund industry, he calls for improved regulation to help prevent the abuse of investors by fund managers. Among his many chastisements was this statement that gives a clear and appropriate summary of the situation. He says, I have many concerns about the prevailing levels of conduct and values in today's mutual fund industry. And keep in mind that he's at the forefront of that, right?
Yes, absolutely.
But my overriding concern is that funds are operated largely in the interest of their management companies rather than the interest of their shareholders.
Well, of course they are.
And what they mean by shareholders, I don't think they're talking about the shareholders of the fund. They're talking about the people that own shares within the fund, right? So not owners of the fund, but owners in the fund.
They're talking about the guys that their 401k, a piece of it's going into that fund every month, the bottom level investor.
Right. And so what he's talking about is, why is my money being invested with companies that create a system that ignores my goals? And it has to do with Wall Street greed, and which is nothing new, of course. And he said it really shouldn't be surprising to learn that these things, because the public is already suspicious of Wall Street, right? We're suspicious of Wall Street, yet we're handing them our money every 2 weeks.
For me, one of the biggest eye-opening things was when you had to sit down with that insider. Yeah. And I knew it happened in the pharmaceutical industry, right? Where a drug rep can push a doctor to prescribe their drug, right? With gifts and lunches and stuff for the office and all that stuff. To find out that these people are getting monetary kickbacks, for putting people into certain investments, that isn't passed along to the investor, right? That for me is
that they earn a commission, right? Yes.
On top of what they're already charging you, now they're getting paid from the mutual fund guy for putting you in his mutual fund.
Or REIT, right.
Or REIT, or whatever it is,
right?
Right. Are they basing that decision on what's best for you or on the commission or kickback that they're getting?
Well, I know if I were interviewing the owner of that, he'd go, well, we're trying to, it's both.
It's going to be a win-win for everybody.
It's a
but
both.
Let's be honest.
If like this particular fund or this particular company that manages private money, and they have about 390 million assets under management, which in the world of managing other people's money, it's really small. I mean, you look at a Seraphim or somebody like, it's billions of dollars, right? But you're talking about, you get 1% of assets under management. And I mean, that's $3.9 million, which is it's not a huge amount of money. I mean, because
2 minutes.
You know, when you're looking at $300,000 a month coming in, you've got overhead and you've got staff and that you can eat that up pretty quickly.
Yeah.
But don't get me wrong, it means that the fund manager has a pretty good lifestyle.
Yes.
But that's just the start. That's like the baseline minimum. Then every time, and they pretty much move your money from one place to another on a quarterly basis. You know, retail's really good in December, right?
Hey. Yeah. Our cash flow's down.
Right.
Let's get everybody into something new.
Yeah, right, exactly. Right. Yeah, all you got to do is move money, and you get a fee for the transaction of the movement. You also then when you move them into like a REIT, for example, and the REIT says, "Yeah, we'll give you 10%." You move $100 million of out of the 390 into the REIT, and now you've just made $10 million for yourself, more
on top of everything else.
And so you get 1% for assets under management. You get 10% for everything. So then you get a transaction for moving it. You get another 10% with. Here's the rest of it. People don't realize is you get the 10% for moving it. Then there's what they call trailing residuals. So you might, if it stays in 2 years, you get another 3%. Stays in 3 years, you get another 2%. Yeah, right. So the longer it stays in there, the more money you get out. And then there's also penalties for moving it out.
Yeah.
And so anyhow.
Oh, you don't want to do that? Hey, I don't want my money. No. Yeah, if you pull it now.
Yeah, sorry. Yeah. Yeah, right. Anyhow, you're listening to Right Path Real Estate Radio. We're going to talk about how 401ks compare with a real estate investment and what that can do for your financial future. You're listening to Right Path Real Estate Radio, 713-785-1817. If you want to give us a call, 713-785-1817. We'll be right back. Stay tuned.
Hey, yes, Kenny, we were talking about investing in real estate versus 401k.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet?
Joe, good morning, Ryan. Good morning, Maribel. Good morning, Andy.
Jet Lending will help you purchase properties quickly
good morning,
with as little cash out
Lovey.
of pocket
Good morning,
as possible.
Kenny Lee on
Jet Lending
Instagram.
also sets up a repair escrow fund to help you
Commander
with repair
Root.
costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts. Benchmark Insurance Group of Texas. 281-569-4353. That's 281-569-4353. Or
this
online
is great. As I mentioned before, the 401k has been presented as a
plan. Are you looking for an investor-friendly general contractor for your investment
bank
property?
Account
then
when
call
you retire
Fast Track Remodeling at
0 work on your part. In other words, the 401k is a way for the financially
or reach us on the web
to buy
at fasttrackremodeling.com
without becoming educated
Fast Track
investors.
Remodeling specializes in turnkey remodeling of single-family investment properties.
I've learned
whether
through
it's a
hard
flip
experience
rehab
that there's
or a
no
rental
such
rehab.
thing as a
we manage
shortcut
every
to being a
aspect
good
of a
investor.
rehab from start to finish with a highly efficient, standardized process.
Yes.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
Mike's on.
Hey, welcome back. Welcome back. Right Path Real Estate Radio. My name is Tom Perry. I'm the host of the Right Path Real Estate Radio Show. Joined live in the studio, as usual, by my brother from another mother, Mr. Daniel G. in the house.
Good morning. Good morning.
Hey, so one of the things that this 401k OS as book is talking about, 401k OS. If you're looking it up in the Amazon or something like that, it's 401k with the letter K in parentheses, and then they put an AOS at the end just to make it a chaos, like CHAOS or yeah.
Yep.
Yeah. Okay. I always forget if there's an H in there or not.
There is.
Yeah, right. So one of the things that he's talking about is that the 401k system is designed to build wealth over time, but it doesn't do a very effective job of that. And if you want to be financially independent, what he talks about is that when you have enough money coming in that you meet your monthly expenses.
So, just real quick.
Yeah.
I believe that it's sold.
Yeah.
As a system to create.
Correct.
It's not. I don't know that it's designed.
You're right.
For me, I think it's designed with a complete opposite intention.
Right. Well, it's designed to extract your money and put it into Fidelity, Vanguard, those companies. And then within those companies, then there are fund managers, because then the fund has to make money, the company has to make money, the administrator that's actually managing, your whole payroll and all for the company has to make. There's everywhere down the line, there's people extracting fees. And most people don't realize how much that is, because they're not. I mean, they're all disclosed, but who actually reads the?
Yeah.
I mean, it's a little bit like the disclosure on your credit cards, information, or you install a new piece of software or a new app on your phone, and there's
scroll the bottom and hit accept.
Yeah, right. I mean, who's actually reading that? And most people aren't.
Yeah.
And what's interesting is, I mean, we have some very, very smart people that are part of our mastermind group, that are part of our organization as a whole. And even when you talk to really, really smart people, I don't want to throw anybody under the bus. I mean, but I had lunch with somebody that I consider really, really smart last week, and I was just sharing some of the things that we're teaching, and wrote it down on a napkin. And he goes, "Hey, can I take that?" And it's like, and it's really new information for what it is, because there's an example in this book where the guy talks about that. Imagine if you had a pension and you had $6,000 a month coming in from your pension. Now imagine you have $20,000 in your 401k and you've got to spend $6,000. Whatever amount that you've got in your 401k, it's not generally creating income. It's just a nest egg. So it's really the difference between the goose that lays the golden egg versus the golden egg.
Yeah, you're eating the goose right away.
Right.
Yeah.
Yeah. And that's a fable that I think Aesop. It's an Aesop fable, and he wanted to be able to get at, as if there's a whole warehouse of golden eggs inside of the goose, and open up the goose to be able to get to more of the eggs faster, and found out, hey, and opening up the goose, you just killed the goose, and no more golden eggs. So imagine you had $20,000 in your 401k, and your expenses are $6,000 a month. Well, if you got a pension that's paying that $6,000 a month, or in our situation where we're going to teach you how to build income-producing real estate, that, I mean, imagine if you had 20 properties, rental properties, that's throwing off $300 a month of positive cash flow. Now you're talking about $6,000 a month of tax-free income.
Yes.
And one of the things that we teach in our Wealth Through Real Estate workshop is, how is that money tax-free? And it really has to do with this concept called depreciation, that the federal government says that although we know real estate appreciates over time, the structure itself, we feel like that's a depreciating asset. Now, why do they do that? Well, nod, nod, wink, wink. It's partly because it's depreciating. It's secondarily, we know that a lot of politicians, they own real estate.
Of course.
So they're going to write tax. And if it's not just the politicians, it's the very wealthy and powerful.
The people that are in charge.
The Sources of the world, the Murdochs of the world, the Ted Turners of the world. I mean, those guys that have, I mean, Ted Turner's, I think, the largest property owner in the nation outside of the federal government.
Oh, wow.
Yeah, the federal government owns more property than anybody else, and he's the largest private owner of real estate in the country.
I wasn't aware of that.
Yeah.
Wow.
Yeah, he's got tons of land in Montana, and I mean just thousands and thousands and thousands of acres.
Crazy.
Yeah, crazy. So what do wealthy do when they create a lot of wealth? They put it in real estate.
Well, yeah, because for a lot of people, it's not even about what they're making on it. They're just putting it somewhere they know it's not going to disappear. Right. Because so many stories you've heard of people putting all this money into the stock market via 401k or just, regular investing.
Yeah, would it shock anybody? I mean, I hope Tesla survives, right? But on a per car basis, I mean, it looks like they're losing money. And so they're kind of at a break even. They're on a very tenuous. So I'm like, would you own Tesla stock right now? And I would say no. Now, would I buy a single-family house for $150,000? Yes.
Absolutely.
Because I can't go and replace. I'm buying it below replacement cost. I'm buying it in stock market terms. I'm buying a business at below book value. Book value on a business is what are the assets, cash on hand, the real estate, the inventory, all of that. What's the book? If you were just to buy the company, close it down, sell off the assets, then that's considered book value. So let's say that book value on a business is $1 billion. It's got $300 million in cash, and it's got $700 million in other assets, right? Question is, would you buy that for $400 million? Well, heck, you get $300 million in cash right off the bat. Yeah. So now, on a fire sale, could you sell the other $700 million of assets for $200 million, and now you've got $500 million that you paid $400 million for? You net $100 million. I mean, would you do that? Yeah, every day, all day long. Now, when you're buying a $150,000 house, you're essentially doing the same thing. You're buying it below what I'll call book value because you're buying it below replacement cost. You're buying it below below the median home price for sure. And when I say replacement cost, a new home builder cannot go and build a new house buy the land, pay the contractors to build it. I mean, buy the materials, the labor, all of that. Have the holding costs, the cost of money, the taxes, the insurance, the utilities, the HOA while you're building it, all those kind of things. The selling costs, because if you're gonna be in the business of making money building houses, you're gonna have expense for selling it. You're either gonna have in-house salespeople, or you're gonna have to pay buyers agents and title insurance and all of those kind of closing costs.
People don't work for free.
They don't, and then you're gonna have to have profit, and you put all those numbers into the business model. You cannot currently sell a $150,000 house and be profitable, and it's just not. I mean, Tom, what about tiny houses? I mean, even on tiny houses, it doesn't work.
And that's buying retail,
right?
And what we're doing, for our students and things like that is not only we showing them how, but we're helping them do it as well. Is capture equity on the front end. Right. But it works even at retail because of it being below. And let's go back to the golden goose analogy, right? Mm-hmm. That thing's laying an egg with that passive income, right? That tax-free passive income.
Right.
But what we didn't mention is your nest egg is not depleting.
Right.
It's growing.
It is, right.
Year after year after year.
Yeah, right.
Right?
Yeah.
And so is that passive income.
Right.
Right? So it's like your goose is getting bigger even though you're taking on...
Yeah.
That doesn't happen in a 401k.
No, it doesn't.
I can't think of any other investment that works like that.
Right. Yeah, because you get equity appreciation over time. You also get the cash flow. So it's really, can you imagine if you knew that you could buy a stock that you knew was appreciating at 7%, that was paying a 12% tax-free dividend on an annual basis? In other words, quarterly, paying 3% of the value of the stock in a dividend on a quarterly basis. So 12% a year, but it was a tax-free dividend. And you could leverage you could buy $150,000 worth of stock for only $30,000. So in other words, it's really be like buying options, yet you own the stock and you were getting the benefit, and the options were growing at 7%. Which is really, the option would have to be growing at 35% per year, practically guaranteed. and that the option was paying a dividend. Can I tell you no option pays a dividend?
Yes.
And it would have to be almost like if anybody knows about tax-free municipal bonds, it would be like a tax-free municipal bond as a dividend at 12% tax-free. So
when you put what we do in real estate in financial market terms, it sounds illegal.
And the trouble is, here's the biggest issue, is that I recognize that just in those that conversation that I'm having right now, that I know that there's a lot of listeners that may be tuning out, may be turning off, because they're like, I don't even know the vocabulary of what he's talking about. What is he talking about when he says a tax-free municipal bond? What's he talking about when he's, when he's discussing these financial terms? And that's one of the things that's mentioned in this 401 Chaos book, is that the real problem is ignorance.
Yes.
And one of the things that this author talks about is that the SEC does its best to regulate the industry and protect investors. They conduct investigations as they work hard to look out for the little guy. They prosecute those who are shady business people. However, there's one thing I've learned through my research and as I pursued my own financial education. It's impossible to truly protect the ignorant. Congress can pass laws all day long, but those laws will not make people smarter. It's up to us individually to improve our own financial intelligence.
Of course it is.
So what I'd invite people to do is start improving your knowledge base. Now, you can read a lot of books. And I've met people. There's a period of my time, and I think you know about this, over a 10-year period of time, my goal was to read 2 books a week. And that'd be 100 books a year, 1,000 books in 10 years. And I realized, where's my life going to be having 1,000 books worth of knowledge over 10 years of time versus, all the other things that most people fill their time with.
Correct.
Now, I don't expect you to go out and read 1,000 books over this next, week or 10 days. But what if you read a book a month?
Yeah.
I mean, just a well-selected book on the financial marketplace. I mean, and there's some books that we could recommend. I mean, there's some great. I mean, I would say start with Robert Kiyosaki's book, Rich Dad Poor Dad, or Cash Flow Quadrant, and really talks about some of these things. And beyond that, in fact, that's one of the things we probably need to put on our website is a reading
book list. That'd be great.
A book list, the top 10 books to start reading. I would say this 401 Chaos book is going to get added to that top 10 list
for sure.
And so, Rick, you said that I have how much time?
1 minute.
Okay, good. So when you compare how you invest in, and I know some people are going to say, well, but Tom, what about a self-directed IRA? And I'm a big fan of Quest Trust Company and what they do. But what I see oftentimes is that people, just because they go to a self-directed IRA does not mean that they've improved their financial intelligence.
Correct.
Right? They've not improved. They're still ignorant about a lot of things financially, and so then therefore, oftentimes they move it into that system and they never deploy the money.
Just sitting there.
It's just, there's $300 million sitting undeployed.
Just at Quest Trust.
How
many other of those companies are there out there with similar assets sitting there?
Hey, the music says we got to cut it off, so we'll be back in 4 minutes. I hope you stay tuned. You're listening to Right Path Real Estate Radio.
Hey, good morning, Nora. Good morning, Mr. Perry. Good morning, Robert.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
1 minute.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
Mic's on.
Hey, welcome back. Welcome back. Right Path Real Estate Radio, 713-785-1817. That's 713-785-1817. You know, one of the things that when I've decided to pick up a new topic to learn, and one of the things that I've discovered that I focus on first, like when I got into the insurance business, what I realized is that there's a particular vocabulary that is in the insurance industry. You know, people talk about deductibles and co-insurance and things like that. And in the real estate industry, it's the same thing. It's got its own vocabulary. And in every industry, if you want to start educating yourself, that self-education model, then and here's the sad truth. The sad truth is that there's nowhere in our educational system that teaches us the vocabulary of some of the industries that we interact with on a regular basis.
Very true.
Why don't they teach us the vocabulary of insurance? It's not like anybody's going to graduate high school, go through life, and not have to know about car insurance and health insurance and life insurance and homeowners insurance and perhaps even builder's risk versus a vacant dwelling. I mean, why don't they teach insurance in high school? Or about financial terms, about price-earnings ratio, or about market capitalization rates, or any of those kind of things. Yet every single high school student can quote Romeo, Romeo, wherefore art thou, Romeo, or has to study geography of all the countries in Europe, which I'm saying. I'm not trying to say those things aren't important. I'm just saying, can't we find some space for some real things? I mean, why not talk about how banks work?
Yeah.
And what's the difference between a mutual fund and a savings account and what that does? I mean, and at least, if nothing else, teach the vocabulary words of those things so that perhaps people could have an interest in what those things are.
So here's the problem if we do that.
Yeah.
We have people that graduate high school that are educated.
That's a problem.
And when people are educated, they typically take things in their own hands.
Yeah.
And they don't follow the herd.
Yeah.
Which is what our education and financial system are designed to do.
So what you're saying is our education system is designed to keep people in the matrix.
Correct.
Not to unplug from the matrix.
Correct. Because if we're not sending the next generation into the 401k, the current financial
into
system
the workforce.
as is, into the workforce,
right?
Into the 401k system, into the stock market,
then how can we steal their money?
How can we keep the people where they are?
Yeah.
And how do we keep the people that are on the bottom?
Yeah.
Right.
In fact, going back to this book, greedy folks This is talking back about the real problem is ignorance. And it says, greedy folks will find ways both within the law and outside of it to pick your pockets. The only person who can protect your money from these sharks is you. Laws and regulations are no substitute for experience and education. And it says one goal of this book is to help you learn to ask the hard questions of your advisors. I also want to help you analyze your own situation, determine if you're invested properly to achieve your personal goals and objectives. Well, here's the problem. As we've literally brought thousands upon thousands of people through our group, through our training classes, and when this is assuming that people have personal goals and objectives as it relates to their long-term finances, 10, 50. We know that most people don't have long-term, like 5 year. 5 years is considered long-term to most people. Most people don't have a 1 year goal. And the trouble is
because they're not taught to.
No, right.
They're not. They're told, hey, you do this, you'll be fine.
In fact, here's one of the things that I've recently been studying: goal setting.
Yes.
And what most people, when they set a goal for 1 year, they way overestimate what they can accomplish in 1 year.
Yes.
But they way underestimate what they can achieve in a 5 year or 10-year period of time. And that's where a lot of people, they don't achieve their 5 year goal because they set such a lofty 1 year goal. In other words, we've had people literally come in and say, we say, hey, how much money do you want to try and create through real estate in an X number of, and taking into consideration the capital that you have, the level of experience that you have, all of those kind of things. And some people create, well, I want to make $1 million a year passively.
Yes.
And we're like, well, have you ever, working as hard as you can when you're awake, have you ever made $1 million? Oh, no, what's the most you've ever made? 60 grand.
Yeah.
Most I've ever made 60 grand working. Okay, so what you want to do is you've never made more than 60 grand working your tail off. Giving it your best effort within your own skill set. And yet, what you want to do is create $1 million not working a year.
Yeah. You want us to give you the magic pill to do it.
And you want to do it in less than 6 months. Yeah. Because you want to, and so as a result, people overestimate what they can accomplish in a year.
Yeah.
And way underestimate what they can accomplish in 5 years or 10 years.
So when that 1 year goal doesn't work out because they set it too high, typically they're done, right?
Often,
Or they create a belief system inside their heads that they'll never be able to achieve that 5 year goal.
Right.
And it becomes a downward cycle from there, right? And a lot of that is because nobody's ever sat down and explained to them, hey, this is where you are.
Right.
This is where you want to get to. There's got to be a feasible road between the two.
Or actually talked about the right questions for them to ask of themselves to say, hey, let's take a clear look at where you are right now. I don't need to ask you. In fact, can you? I'm going to need to take this.
Okay.
You continue on the radio show. A few times.
So, just got a phone call from our attorney. We've got a couple things going on with a couple different properties. So, Tom, step out to take that real quick. So, my argument is that our education system and our financial system were created to work hand in hand. I believe that they're created to set you up, not necessarily set you up for failure, but not to set you up for success, to keep you at just the level that you're not asking too many questions, to keep you at just the level that you're not going to make too big of a show or cause too many problems about what's being offered to you, what's being taught to you, what's being put on your plate, right? So as long as the education system is continuing to produce a certain kind of student to go into a certain type of job market, to go into a certain type of financial market, everybody that has created the system of things that have in place is going to be happy because that's what they want. They want the system to stay the way it is because it's been created to benefit them. It's been created to benefit the money managers. It's been created to benefit Wall Street. It's been created to benefit the government, right? Because it's not just the financial institutions that are squeezing your 401k. It's being squeezed from two different sides. It's being squeezed from the fund managers on one side and the government on the other. And, on the radio last week, I read a quote from the 401k Chaos book from Warren Buffett. And he talks about how the financial industry is the only industry where the results of the professional can be outperformed by the layman. And for those of you that aren't familiar with the term layman, that just means the ordinary guy, right? The problem is the ordinary guy has to be willing to take the time to give himself the tools necessary to be able to outperform the professional. And those tools are self-education, whether that's through books or, I mean, we've got so many different options now that your grandfather didn't have, right? Your grandfather, he had to learn everything about the stock market through books and through newspapers, and had to wait for the newspaper to come out to get the daily, what is the ticker on the stock? Is it up? Is it down? Like all that kind of stuff. But now we've got this information at our fingertips. It is right there at the edge of our fingers, 24 hours a day, 7 days a week, 365 days a year, and we don't take advantage of it. And Warren Buffett, he talks about an obstetrician, OBGYN, being able to deliver babies better than moms and dads can. And he talks about a dentist being able to pull teeth or fill a cavity, do a root canal better than the patients can, right? And he talks about no other industry in the world is the patient or the person that's actually needing the service capable of becoming better at that than the professional without becoming a professional themselves, right? You can learn how to take control of your retirement. You can learn how to, even if you're in the stock market, you can learn how to be better at investing in the stock market than your professional money manager is, which means that you as the layman can be better than the professional. And there's no other industry that's possible in. And if that's not a red flag, I don't know what else is. It opened my eyes up to see that, hey, we're putting our faith and our trust in the wrong folks here. And 9 times out of 10, you don't even know that person. You don't know what their goals are for them. You don't know how their goals align with your goals. You don't know how their company goals align with your goals. You need to ask questions that you're not asking. And a lot of times it's an intimidation thing.
2 minutes.
Right? We, as the layman, for lack of a better word, because we don't have that education, we don't have that knowledge, we don't have that skill set, we don't feel like it's our right to be able to question the professional. And that's one of the things that 401 Chaos does, is it teaches you a lot of the right questions to ask your financial planner or your financial mutual fund manager, whoever it is that you're putting your trust in, whether it's your 401k or whatever that is. But it gives you the courage and tells you the right questions to ask so you don't feel inadequate when asking them. Welcome back.
Yeah, thanks. Great news.
Great news.
Really good news. Yeah.
I love good news.
When you're doing a live show, I can think of 1,000 people that could call me right now.
Yes.
And 999 of them I would not have answered the phone. And I keep my phone on vibrate. And I was expecting a call.
Okay.
In fact, I almost called you this morning to go actually be down there for this event. So
1 minute.
This has to do with a particular property up on the north side of town that's got about an acre of land. And yeah.
Awesome.
And so all that worked out perfect.
Sweet.
So it's going to be signed today. Should be gone tomorrow. All that kind of stuff. So that was great. Man, I'm so excited about this week. I really am.
We're going to have a great week.
In fact, I'm not excited there's going to be some great things that are going to be going on with our businesses. But even more important, the thing that I get even more excited about is the differences that we're going to be making in people that are listening in their lives. Just the things that are coming. I just get goosebumps getting so excited.
Who do you know in your life that is going and taking an active time out of their schedule to better themselves to be better for you? That's what we're doing on a daily basis.
Yeah.
We'll talk a little bit more about that on the other side of the break. We hope you'll join us in our last segment. We'll see you in a couple minutes.
All right. I'll be right back.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that.
Hey, Ben, what's going on, brother?
Turn around on quotes or binders.
Hey, I got your voice recording on Facebook Messenger and meant to get back to you.
The team at Benchmark understands the investor mindset.
I know I haven't.
They know what you need and when you need it. We're here for you.
So the answer to that question, without getting too much detail, there's two different answers to that question.
Bundling your properties on a single policy
and it has to do with the person themselves.
Benchmark has been in business for over 10 years.
But if we're talking about a qualified person,
and we insure over 30,000 properties.
I don't want to send them through any kind of
our exclusive investor package.
Anything. I'd like to sit down and talk with them one-on-one.
Can do for you.
Tom and I will have a sit-down meeting with them. I just would need to feel free to give them my contact info or give me theirs, and I'll reach out and schedule an appointment. We'll sit down with them.
Benchmark Broker.
Figure out where they are, what they're trying to get to, and see if it's a fit.
281-569-4353 or online at benchmarkbroker.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million.
Man, I had been 6 years old.
Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs.
I was 9 years old. My mother would come down and pick my brother and I
first-time investors
from my dad's house. She lived in Houston. We were out in the country.
281-872-7800
for the
or
weekend
email
or
us
whatever.
at info@jetlending.com.
She had this car that had a CD
and don't forget
radio
about our famous Third
the whole
Wednesday
way
Super Investor
from
Networking meeting.
Up to Houston,
lots of fun,
it's
lots
a lot
of great
shorter
real
drive
estate
now
talk.
than it used to be.
We'll see you there.
It used to be 55 miles an hour, nothing but sugar cane and cornfields. But we
Are you looking for an investor-friendly general
contractor
for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success.
Had a wonderful Mother's
Use a
Day.
detailed scope of work so that everything gets done. Train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
Mic's on.
Welcome back. Daniel Gollinger, Right Path Real Estate Radio. I just want to thank everybody for joining us today. I hope everybody had a wonderful Mother's Day weekend. Happy Mother's Day to all you mothers out there, and for all you gentlemen with children, I hope you took great care of the mothers of your children as well. So we've been talking a lot about 401k versus real estate today. Before the break, we were talking about, the value that we try to bring, the value that we try to provide, and what we realize is very much the same way you can educate yourself in the market. Everything you do, you bring a certain value, right? In a capitalist society, you bring value to not just the people that you're in contact with, but you bring a certain value to the market. And while we try to bring as much value as we can, not just to the market, but to the people we work with as well, what we do realize is that we can grow that skill as well. So we've been spending a lot of time working on growing our value to the people that we work with, and growing our value to the people that we're going to work with in the future, to make sure that we are giving them the best possible value from the expertise and the knowledge that we have in real estate. So it's very important to us that the people that we work with get that value, and they see that value up front, and we can make a difference in not just the marketplace, but as many people's lives as possible. As Tom puts it, we are on a mission to unplug people from the matrix, and we are trying to unplug as many of those people as possible, because if nobody comes up and attempts to unplug you, or at least gives you the option to get unplugged, we fear that most of you will never even have the chance.
Sorry about that. I had to sign it. We signed a contract on a property. One of our acquisition guys got it on Friday, I believe,
Yep.
and then transaction coordinator's in today, so I had to sign on the buy side, and then I've got an appointment today at 4:00, and real estate is easy. The
people make it hard.
People make it interesting, and not necessarily hard, just interesting. And but what I'll tell you is that I think that real estate, single family real estate more specifically. Now, there within the next week or two, I'm going to go and visit with somebody in the state of Texas that's a self-made centimillionaire. I mean, he's worth about $120 million. Yeah. Now, if you have that kind of capital, I was doing the math, and you were going to do what we teach. And if you just took $120 million and you decided, hey, I'm going to buy $150,000 houses.
That's
just
40,000 houses?
It's 800 houses. 800.
If you're buying I was leveraging.
All cash. Right. Okay. All cash.
I was leveraging.
Now, if you took that $120 million and you leveraged 5 to 1, you put
4,000.
Be 4,000 houses. I mean, if you bought 30 houses a month, it would take you more than 11 years to get there.
You'd have to buy a house a day for 11 years to deploy that kind of capital.
Right. So I get why people with that kind of money buy big tracts of land to park their mony, or
the
they
state of Montana,
right? Or all of South Dakota.
All of South Dakota.
Right. I mean that
the 6 people that live there wouldn't mind.
Right. No. Right. No, all you have to do is you can get all those in your living room and just say, "Hey, y'all ready to sell?"
Yeah. Buy the
yeah. Right. Guys. So you recognize that when you're trying to deploy that level of capital, which is the reason I was approached many times in the early days of Houston Now Spires by the big hedge fund guys, the Blackstones of the world, and people like that. How quickly could you deploy $500 million?
Can't.
And you're like, not that quick, actually. Yeah. And they're like, well, because we can raise that kind of money, and could you pay us, 7% on $500 million? I'm like, well, over time, yeah, maybe, but that's. But it really, in single family, one of the advantages that we have as investors is that we're not trying to deploy that level of capital.
30 seconds.
So because of the inefficiencies in the marketplace that we have right now, that's a huge advantage to us.
That's why we can operate the way we do.
It's the reason why we can make 35%. We couldn't make it 35% rate of return if we were trying to get it on $500 million.
Correct.
But on $1 million, $2 million, $3 million, you can do that. Hey, you're listening to Right Path Real Estate Radio. Thanks for listening today, guys. We will be back tomorrow, and we love you, and we're going to help make you wealthy. Thanks so much. Bye-bye.
You've been listening to Right Path Real Estate Radio. Find Tom at rightpathrealestate.com. You can put the fear behind you and listen every day from 9 to 10 a.m. on Business 1110 KTEK.